following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 11th day of July. My pleasure to be here Monday through Friday, Eastern Time at 877-927-6648. Bravo, S&P, all-time high. S&P right now, SPX.X, trading at 2140.19. The previous high was 2134.72, made on the 20th of May of last year. And the way I've calculated this is a leg B in a brand new buy mode in the monthly chart. Yes, you're probably, let me see, 1820, 1810. Nope, that's the way I'm counting it. The SPY is, I think it is just made. It had to get to 213.78. It's gone 4 cents high to 213.82. As we speak right this moment, we are looking at the S&P depository receipts in leg B up in a brand new buy mode in the monthly chart. Both of them, both obviously the SPY and the S&P, indicating that there should be higher monthly highs to come. In fact, we will go into an acceleration mode. You say, how can that be? I mean, we've got political, we've got internal, we've got strife everywhere. You know what? The market is the market. Don't look down at the newspaper or the media. Look up at the chart, and the chart says leg B in the daily, leg E. I'll talk about that now in the weekly chart. And the Dow should today, if it keeps up at this pace, it's only got another, it's too far. It's got another 80 points to go to make an all-time high. Maybe it needs to wait a little bit. I am going to speak to an issue right now that I think is very important for my work and for the people who follow the Chapman wave methodology and all its plethora of variations under the umbrella of the Chapman wave. On Friday, my Chapman wave trend gauge gave a signal to suggest that there should be a rug pull in the Dow, that it should go minus, even if it was -1 at some point this morning. Well, it looked like it was going to do it. Last night, the futures were down 3, then they were up 3, then they went to up 4, then up 5, then out of the blue, boom, they were up 12. I thought, what on earth is going on? I didn't even want to listen to the news. I just said, if that's the price, that's the price. I don't know how on earth you're going to get a pullback in the Dow. Well, it turns out, if you look at this intraday chart, let me show you. This is, I'll turn this into the Dow. This is a 2-minute chart. You'll see that there was a run up to about 9:50, just 10 minutes to 10. The Dow went to 18,248 and then pulled back, and it pulled back fairly sharply. It pulled back to 18,204. 40-point pullback. I'd say that's a pullback. That doesn't count unless the market goes negative today. And look to the S&P. Look at the S&P. The S&P actually pulled back even sharper. It gapped up, and that gap up low was 2131, and it pulled back all the way to 2132.60. So in fact, it got really close, but it's the Dow. It's based on the Dow, and this will be very interesting because for the Chapman wave methodology, the Chapman wave trend gauge, which is based on Richard Arm's pricing and formula, I look at only 2 specific things: the highs and the lows, and I base a particular technique that says within 2 days you should get a very sharp upside reversal in the futures that gets transmitted and embraced by the cash indices, the S&P and the Dow. It doesn't say that you should have an equal weighting, but it says that there should be a rally. Just be careful. Even if there's a lower low, be careful because it could be a very strong bounce. And that has succeeded extremely well over the last number of years. It has like a 97% or more accuracy rate. But the other one that I had in fact, if I show you something here, you'll see that this one has an extraordinary accuracy rate of suggesting that the very next day the Dow will drop to a minus. Look, that's a negative, and that was on the 29th of June. To go back and find another one, you'd have to go all the way back, back to that crazy period back in July. Oh, it was in July of last year, where you went over 212. You went to 220.47, 229, and 342 in a cluster, 3-day cluster, back in July the 6th, 7th, and 8th of 2015. And then you suddenly reversed the whole thing. You went to a 0.21 and a 0.37. And those are the two that missed. The others worked out well, but this one missed and that one missed. So that goes back a year. So within a year, you've had 2 out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, and we've missed 25, 26. Out of 26, it's missed 3 of them. So I'd say that's a pretty good ratio, because this goes back years. And on the upside, I haven't got any that are canceled out. Okay, so I just wanted to go through that, mention that sometimes things, you can have a change in technique. And that's one of the reasons why I've never given out the numbers, because my belief is that at some point those numbers are going to change, and there people will get stuck thinking that the numbers were the same and the numbers might have changed. So I don't do that. So for now, I'm still sticking with my numbers. But look at this powerful move from 17,063 on the 27th of June to a high of 18,261 as we speak. Fantastic move, up 114, just ignoring completely that the fact that there should have been some kind of a rug pull before the rally. All right, let's move on. I'm going to do these now. We've got just a limited time. Let me just run them quickly. S&P right now is at 2140.46, just shattering that old 2134 previous all-time high. The support therefore is at about 2122 on a weekly basis. Let's go to the IWM. We'll get that out the way. IWM is up very sharply. It's up 134, up 1.15%, much better than the Dow and the S&P, and it is trying to tackle the previous high to make leg D in the 118.64. I said I'll talk about these Ds in the weekly, but I'll do that a little while later. If I remember, there's no rush because we've got a whole week to do that. QQQ, same thing. That is breaking out. That's very nice at 100. I said to my subscribers, to my opening call, we have long positions, no short positions, and they are really doing that very nicely. Quite a few have double-digit returns. Let's go to the gold. Gold right now is trading at, it's up about 0.6. So it's at 1359. I think it's just going to struggle here a little bit. I don't see, I wouldn't call it a short. I think it needs a little time to kind of digest these big gains. That's all. Crude oil at this particular point, CL is trading at 45.35, also down 0.06. I also think it's in a range, that's all. But the TLT, that's really what you want to look at. The TLT's only pulled back 0.71, but it is a peak E, and it says, watch out, we could have a little bit of a pullback. If bonds pull back, the market could go a little bit higher. I'll be back. Basil Chapman, Tiger Technicians Hour, and the Dow's up 116. Be right back after these important messages.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So, my thinking here is on the short term, we're getting a little overboard, and then we should have a pullback, make peak B by tomorrow, maybe. And then we go up to leg C. So it might take all week to get to leg D. And at this point, I'm looking at how does the daily work together with all these different weeklies. But I suspect that the Dow needs to get to 18,352 first before we have a more serious pullback. That is in points, maybe not so much time. This is where there are a lot of people that have missed this rally completely. In fact, there are a lot of people that are still short. So it's going to need some time to unwind before we get extremely oversold. Remember, we were looking last week at CTAS. I noticed today it's down sharply, got an alternate count. I said, I have to consider it's more likely an F than an A, but I can't really do anything now in the daily. This is Syntas. The weekly is in E. I can keep E because it still could go to an F, could even go to a G because the MACD is still very strong. The stochastic is at 91%. So I don't have to make any changes. We don't have this in a portfolio. We should have it in a portfolio. We don't. I've had it long. I mean, I've looked at it for 10 years or more as an Indian market indicator. Look at that move up. It's closed under the 9-period moving average, only 2 consecutive months. That was that deep pullback going from December to January. And then it just moved right up. So out of all the moves since it really broke out in, let's call it August of 2010, it's only closed 3 times under the 9-period moving average in the monthly chart. Let me emphasize again, in the monthly chart. That is outstanding action, but it is getting a little bit tired. Now, looking at, I see Steve Rose just joined the den there. Steve, congratulations on a great call. Really beautiful call on entering the, you were talking about it, entering long positions just off the log. Congratulations. Now, what we're looking at here is within the context of all these different, this plethora of different tools that we use and indicators and sentiment indicators, whatever. If I'm looking at the volatility index, I didn't even want to do it over the weekend. I could have, but what was the point? Because we knew exactly what was going on with the VIX index. I'd shown it Friday. Usually I'd spend some time. But what was the point? We were just plummeting from the 26 as a peak F top in the Chapman wave from the Brixton high down to last week's low of 1335 or something like that. What was it? 1349. And now we went even lower. My thinking is here that there could be a little bit of a bounce, just a little bounce in the VIX index, but we've got to be prepared with the way that the monthly has worked, and it's been under the 9-period exponential moving average, that black moving average right there, which is at 15.90. We're trading right now at 1336, up 16 cents. You put that together with those that major plunge from 53.29 in August of 2015, the China plus United States interest rates scare. It was an aberration. Should never have gone that high, but it did. What we're looking at here is there's just tremendous buying pressure. And at some point, just as everyone says, you know what, it's finally good to get back in the water. As they get back in the water, you're going to hear, shark, shark. I have a funny story about that. I'll tell you the funny story. Why not? It's a Monday. Back in South Africa, my wife and my kids, I'm originally from South Africa. We went back to visit when my kids were still small. My son might have been 12-ish or something. My daughter was a lot less. And we were driving along the coast from Cape Town. And it's the most beautiful thing. You can go to Cape Point. On the one side of the ocean is Atlantic, the freezing cold water. And then you come around the tip of Cape Point and you can actually see the two oceans meeting, see the color changing there. That isn't actually the lowest point of Africa, but it is the lowest significant point because there's a curve that goes a little bit lower. And then you get this funny little, like a little wart or something that sticks out, which is the peninsula of Cape Town itself. Anyway. So the distances are not very great there. So in one day, you can go from early in the morning, a walk along the beach, and then you can go for a drive around the coast, and you can swim in the cold water, then you can swim in the warm water, the Indian Ocean, and then you can go back and listen to a symphony concert. I mean, everything's it's very, very doable. So anyway, we're taking our drive and all that, and we come back, and we're now on the warm water side, Muizenberg it's called, and it's always a little bit windy, and the lovely waves. The waves just come over and over and over and over. You know, it's not like a big wave and you wait. It's like 5 or 6 that just keep coming in, right? And so we finally get there. It's about 4:30 in the afternoon, and there are lots and lots of people there, and we're just about to go into the water. My wife says, you know what, I'll join you. I'm just going to go change. She goes into the changing room, and as she goes in the changing room, here we are. We're about to go into the water, and she comes out, and as we're about to go into the water, just waiting and waiting for our one day that we were going to go to Muizenberg for the warm water swim, a lifeguard shouts, shark, shark. That was it. We never did get to swim that day. You don't defy. Oh, it was funny. It wasn't so funny, actually. There were 2 guys out paddling with their surfboards, and the entire beach is shouting and waving at these guys, shark, shark, come in, but you can't get in. The water is the noise of all the waves and everything. And they turned around, both of them together. I don't even know if they knew one another. They started waving at the shore until it suddenly they realized they're shouting shark, and the lifeguards are blowing the whistle and all that. And you should have seen them come in so quickly. Anyway, all right, everything was safe. There were no sharks. Right, so this VIX index has made this uppercase letter A, Eiffel Tower, I call it, straight up, straight down. And now it's in the testing the waters. Get back to the waters right here. And so when we're looking at, I'm sorry, Steve, I believe you went to Martha's Vineyard. This is about the coolest week I've ever remember in the summertime. I don't know how cool it is, because sometimes the island is a little warmer than here, but it was really cold. Playing tennis, it was very cool. Okay. So now we're in an area where you could start a little bit of a bounce. So my thinking here is, at least for the shorter term, the VIX index at 1339 is between 1339 and maybe 1 or 2 little scary pullback days, so we can get a test of the 1480s, the 1560s. But if the volatility index remains in the 15s or lower, remains in the 15.30 to the 14s or lower, especially if it can get to the 12s, this market will have legs to go higher. The moment the volatility index, and that's where the weekly chart comes in for later in the week, moment the weekly chart, if we can get that down to a leg D, let me just double check that. Dow is, it's very interesting because the diamonds made their new highs. The diamonds are in leg D. They made a leg D last on Friday, and a leg C in the monthly chart, and the Dow is in leg D now, finally in the weekly, because all it had to do was go above 18,167. But the monthly chart has to go above 18,351. I've actually already done it in anticipation. I shouldn't have. You really shouldn't do that. I'm going to keep it though. I shouldn't have put that up arrow in, because for the monthly chart to go into a buy mode, it needs to get above 18,351. It just needs to get above. It doesn't have to close. So as I'm looking at these charts, the daily is really powerful at 91%, and the weekly is at 70%. So the weekly stochastic has a lot of work to do. All right, we'll be back. Basil Chapman, Dow's up 103. And what else did I want to talk? Oh, I want to look at some stocks. We'll be back straight after this break.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Sorry, I forgot right at the very beginning. I did it, but I just forgot during the actual show itself to show the E-mini. There's this double top. See, last night everything was just very nice. We made this little mini double top that was from the 8th. 9th, close on Friday at 21.25.50. You make a little cup formation, you get to a peak D, you pull back, everything looks great, and then suddenly pop like that at 22.50. So that's 10 to 11. Whoop. And then I looked at it and I thought, oh, a round number high, 2133. Let's see. And I've got the Chapman wave technique that says we should have a pullback, a down pullback. How on earth could that happen? I've seen it before, but so it pulls back, goes down to 2122.75. Looks like, whoa, we've got the pullback coming in. Then all of a sudden, and it gave back all the gains, right? And then all of a sudden moves peak A, peak B, C, D. This is the E-mini 10-minute chart. Pulls back. I thought, okay, that's the one, left side, right side, price time. And then it goes to the second left side, right side, price time match to the plumb line of that exact low at 10 minutes past 5 this morning at 2122.75. And now we're going to see, because this could be a brand new move to the upside. This could be we start to stall. But I have to tell you, there's so many people that have missed out on this. I think there's buying pressure here. So I'll give you the numbers. 2135 would be very positive on the E-mini. And if it pulls back under 2130, it says, okay, just going to do a little backing and filling for now. And most of the gains for the day could be done until maybe late this afternoon. All right, here's the other thing. I'm looking at this. I had really good questions come up. Let me just deal with them because these are good questions. Bob wants to know, in the FTSE, and I'm going to go to the GBDOW. This is the Dow. Let me give you the exact title. It says GBDOW monthly UK stock. So it's their stock index, but it really looks exactly like the index that you would look at. And I did use this as a low. Normally I wouldn't, but I thought it looks so convincing. I'm using this. I'm saying it's in C rather than B right now, the daily. The weekly is in C, and it's broken all the resistance points. I think something's happened. I think there's been a change of trend. And the change of trend is that there was just so much bad news that was not being effective in holding down the markets. And now look, you're way above Brexit, the Thursday high. You're way above. This is bullish. So the answer to your question is A equals C leg. Is this B leg move up just a counter move? They're liquidating buildings in London, by the way, on property funds that were gated. And many offices are possibly moving to Germany. The real economy is suffering on High Street. Should we just buy because of THU and MPC Reserve Bank monetary policy while earnings heading north? I'm going to try to ignore those things for the moment. I'm only looking at the chart, and the chart is stochastic at 86% in the daily. MACD is strong. At least for now, I think that this is a nice move. I would not get in the way of the move. Let me put it that way. Next question was the EEM. I thought I did that just a little while ago. EEM. No, I didn't do the break. EEM, nice move up. This is leg C in the daily. Weekly is making a cup formation at 34.90 up 40 cents. It's good action. It's really not my favorite, but maybe this is the kind of laggard that you're looking at. So I'm going to suggest, I don't know if the question was, it was just a question on EEM, but I'm going to suggest that if you are wanting a long position in one of the overseas markets, then the emerging market index is something. I would take a small position, even though this is a high of 34.90. This is not the position. The real position you would like on a test of the 34.16 to 33.80 level that holds steady, that doesn't break down, treats that 200-period moving average of 33.80 in the daily as a support level. So let's go to Gator in Franklin, North Carolina. Gator, how are you?
Hey, Basil, how are you? How was your weekend?
Weekend was very good, thanks. A little cold here, damp and cold, but it was still great to have a weekend.
Yeah, I want to talk to you about possible notation on the ES monthly chart.
Please.
You know, you show on your chart, I'm looking on in the data at your chart.
Okay, I'm looking at, Gator, just one second. I just want to explain. I'm looking at the E-mini S&P 500 continuous contract. There you are. Okay.
Correct. Yeah. Now, on your wave D that you had back in 2014.
With a circle.
I looked at that thinking that could possibly be a recycle. And they're E's and A. And what we've done just now is would have a big pullback from C to D, but this could possibly be a wave D, which then would fit with the possibility of all the other charts are in D's and E's and F's and things like that, that this could be a market top. Because a lot of times when you get to a market top, once you take out a high, it accelerates. And we seem to be stuck here.
Okay. That is a really good point, and it's a point that I've pondered in multiple ways and in not just one, but I can tell you hundreds of charts from stocks to indexes, even some of the international indexes. There are two things that are requisites in the Chapman wave. One is, most often when you've gone from a peak C to a sharp pullback, and I'm not sure if you remember, we had covered this a long time in one of the Master Trader series, the chances are of making a D as a top diminish, because what often happens is you get a D and then an E fairly quickly. But in fact, the letters normally are F and G. So you get your peak D, you pull back like you should. If I go back, let me explain exactly what I'm talking about. If you go back to the S&P SPX.X back in, where was it? 2011, you made that top in April, and you went peak A, B, C, and then you got to a D. No, this is not the example I wanted. The example I think was before that. Let me just go back a little bit. Oh, of course, this is the example that I wanted. Back in 2006, going to the 2007 and then the 2007 highs, that should be a 7 right there. Let me put that in. There was a pullback in the monthly chart from a D, and then it ran down very sharply, and then it went to an E. But the E wasn't that much higher, and then you pull back. But you saw the stochastic and the MACD near the top end of the line, but lower than it was at the first entry. And I think, if I remember correctly, the weekly chart is really the one that gave this picture very vividly. Here it is. Go back. There it is. I had an alternate count. I had a peak F/B in July of 2014. And it appeared, and many thought that that was it. That was the major top, and it pulled back. And then you got that sudden alternate count G, C, which turned out to be a D, the very next move up at 2019.26, the week of the 19th of September of 2014. That's probably the best one that I can think of. So what you're suggesting is that the C was a sharp pullback, and that this is now a leg D in the monthly. And if you look at the weekly chart, you actually got that sharp pullback. And my contention is that there's a real good chance that even this D in the weekly, before you get a much deeper pullback, will probably pull back and then make an E, because of the pattern that makes what I call that double camel hump stochastic. It makes the arch formation, which turns into an M formation. So can you hold on a second?
Sure.
Okay. So I'd like to deal with that question, because this is one of those things that I went through a lot. I think this is brand new leg B in the monthly, and I'll be back with Gator from North Carolina straight off these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. And the question, which is a fabulous question, is in the Chapman Wave Instant Restart, when you get to the 4th highest peak, that's peak D, alphabetically A, B, C, D, E, F, G, there are certain conditions that can make it a recycle. At the same time, there are certain conditions that make it emphatically a peak G. And you might remember that within the context of the MACD, that very often a continuous move to the upside where the technicals are confirming and you go alphabetically, that's where the G is the most potent, and that's exactly what happened here. So that says to me, this is everything that I look at suggests that technically, if I look at it right up until June of last year, that May high had all the prerequisites that I look for a culmination of a buy mode. And then we went in this could even be called an A to B equals C to D move to the downside to the 1810 level. And then we turn around and the S&P started a brand new move. As it did that, even to the moment that we're speaking right now with the all-time high, the MACD has not yet crossed positive. The green line is still under the faster moving average, the 9-period differential is still under the slow moving average, and the stochastic is just very gently. If I looked at this price here, I would never have guessed that the MACD had pulled back as much and had failed to go on positive, and I would have said the stochastic at 86, which is very good, is the one criteria here that even though it's not anywhere close to the 95, 96% level where it was at peak G, it's still acting pretty well. So the weak link, which could turn into the most powerful strong link, is the MACD. Because if the MACD ever turns up and gives you a wide differential, theta I think it's called, between the fast moving average and the slow moving average, that's going to suggest that you've got even higher prices to come. So if I put that together on a purely technical level, the idea, this is very different to where if the MACD had pulled back just a little bit and now we were looking at that right shoulder failure pattern, then I'd say, okay, now we've got a bounce and it's most likely going to be a D. Maybe we go to an E, but then you're going to have a massive pullback. This way looks like it's the beginning of a move, not the end of a move in the monthly. Is this giving some clarity to my contention that this is a new move rather than an old move?
Well, I see what you're saying. I was just looking at it as an alternative count. I mean, I'm doing a possibility. I like to look at both sides.
I agree, but now
I'm looking at this as such that we could be doing a cup formation here and almost a right side, left side price time match. And the fact that the MACD wasn't positive during this pullback, that being a momentum indicator that there was no oomph to the upside. that we could just be petering out here. And the possibility is that we could be up for maybe today or tomorrow, and then we could get a pretty good pullback. Because there again, the MACD, the stochastic it's okay at 86. 90s I like better. But
absolutely,
with the MACD being down and a cup formation and a possible right side, left side price time match, I'm trying to say, well, if this is the top, what would the notation be? And I think it just, to me,
alternative count.
Could be an alternative count.
So now let's just say for a moment that you're correct in that I've got an alternate count as a possibility. Then I've got to say, okay, let's look at the other indices. So the SPY went from the low after peak D to 181.92, and the last one was 181.02 and 181.09. So that took out the.
Well, you missed a wave D there back in right above 2014. There's a red candle there that looks like it's lower. I mean, I'm just looking. It looks like that could be at wave D. Go to a little bit more to the left, right above the 2014, where the green candle goes down through the 9 EMA. Yeah, right in that area there.
Yeah. So this is 184.69 and 184.94. Believe me, I've counted these waves backwards and forwards. I didn't want to miss a single one. No, that's a high. That is still a continuous move up.
Okay, it just sort of, I can't see your numbers on that, but it just looked like that was
So
there.
I'm trying to put it together. If we go to the other indices, for instance,
that would make that chart a wave G then, if we're doing an
alternate count. Okay.
Yes.
Yeah. So at this point, you'd have a G/B.
Exactly. You could as an alternative count.
Right. So those are good for alternate counts, except when I put it together with monthly charts of the key stocks and I put it together with the monthly charts of the other indices, the pullback that we had from the last high of May of last year, all the prerequisites that I look for were there to confirm that that was a high of consequence. It was a high that completed a buy mode, and that anything new would be a fresh buy signal that goes to a buy mode. That's just the way I'm keeping it for now, to try to keep it as simple as possible. But I absolutely cannot rule out that, yes, there could be an alternate count, but I've counted this backwards and forwards, and I made it an emphatic statement for myself and for subscribers, that if we made a new high, especially in the Dow, by 1 point above 18,351, the only way I can count it is it's a brand new monthly move to the upside. So I'm going to keep it. Now, what's really interesting about that is because the S&P is only in monthly leg B at the new high, and the Dow, if it can actually do it in the next week or so, can go to a new recovery high, is in C. I have to consider, based on the S&P, that you could not, even if the Dow goes to a D, I have to wait for an E because the S&P still has to go to the D.
Okay.
Okay. I hope that just want to clarify in terms of my conviction. And if I had to give it an actual rating right now, my rating would have to be up in the 85 to 90% that I feel secure in saying that I believe it's a leg B. Could be completely wrong, but that's the way I'm looking at it.
Well, my money's on you. I was just throwing it out there as an alternative count. So anyway, listen, thanks so much for your time, Basil.
Great point, and something that I've pondered over a long time. And today we got the evidence that there's a really good chance, based on what we're looking at, that there's a sector rotation that's going into other areas, and the other areas are starting to improve that you would never have thought would improve under these market conditions. And I think the economy, in a sense, is saying that things are a little bit better than people are talking about. Thank you so much for calling. I appreciate it, Gator.
Thank you, Basil. Bye.
But so what we're looking at, folks, I just want to go back to a couple of points that from the emails. So that EM and the FTSE, so far, I have to call up, there goes that buzzer. You see, completely forgot about it. Had the weekend to try to fix it. Oh. That's great. Remind me again tomorrow. And then Julie says, MWW Monster. Yeah, this is very interesting. MWW. I'll look at Monster when we get back. That's Monster. That's a job company. Just coming off the bottom here. Not looking very good as well. Let's HRB, I think it is. HRB. I think it's HRB. No, what was the other one? I'll think of it with an H. That is the jobs company. I'll be right back. Basil Chapman does up 112.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So that was a good point. So Monster Worldwide is trading at $2.53. Monster Worldwide in job search, connections, all sorts of things that have to do with jobs. Once upon a time it was in the 25s, but even more once upon a time it was up in the high 50s. In fact, I think it was even higher at one stage. Yeah, there it is. It was once upon a time an almost $90 stock. We remember it well from the 2000 period. So now it's trading a little lower than, what was it, $90 or $89. It's trading at $2.53. And at this particular level, I think it's a company problem and not the jobs problem, just based on the stock pattern right now. They just did something very wrong, whatever it is. They've come off the bottom of $2.35. Excuse me. I forgot my little button here. Okay. And it is, so the low is 213, it's trading at 253. Hey, 40 cents, it's a 20% rally. But it's in leg B. And I would suggest to you that risk reward, maybe it's even worth nibbling at. You brought it up, Julie, as mentioning it more as in the context of jobs. What's happening to the job world if this is down so low? And all I can say is that versus sentiment, NFP adding jobs now, improving. MWW says no. Yeah. So I'm not going to have time for this, but maybe tomorrow I'll talk about it if you can remind me again. I spoke about it, I think, on Friday. I said that the way jobs are calculated, I think, must be completely wrong. And there are jobs out there, but I actually know a lot of people, adults as well as younger adults, older adults and young adults, who have 1 or 2 or 3 different jobs. I know young people that are doing many different things. You can't even categorize what they do because they're so diverse, nighttime, daytime, whatever it is. So I think the calculations are they're not giving the right calculations. I do think there's been a huge job loss. I think a lot of people gave up, but I also think it's not being calculated correctly. So this might not fit the pattern. And for the life of me, I can't remember H something, a famous company that does for jobs. Not HRB, that's her block. No. It's, can't even think of it right now. Usually I remember them by symbols and it's just, I'm blanking out. HRI, whatever it is. And I'll try to look it up later on today. And that would be a good test because it wasn't doing too well either. So maybe the traditional way of looking for jobs is the thing that's failing. Let me do this. We're about to run out of time. You're going to go for your swimming lesson. What a beautiful day for Monster. No, this is not Monsters. No, I wasn't thinking of that. So we've got the Dow INDU. It did not do the Chapman wave pullback. Day's young, but I just can't see how it's going to go from 112 to -1. So that failed. Second day second time in a week. Very unusual. No, not LinkedIn. It's not LinkedIn. It's with an H. And I'll find it. Now, in the meantime, back at the ranch, what we're looking at is that the Dow has broken to a leg D in the daily because it only had to get above 18,167. But it's the monthly that needs 18,352. It's got to do that. The moment it does that by 1 penny, for me, it's a buy mode in the Dow. And for me, it's the start of Elliott Wave 5. And I think it's going to be one of the most complex 5s that we've seen in a long time. Regardless, look at the volatility index. For the market to pull back today, the volatility index, the VIX is at 1326. The VIX index needs to climb into the if it gets to 1360s and holds there, you'll see the market pull back. But unless it gets to the high 13s and maybe even touches 14, I don't see the Dow going back to a -1, but the S&P has been weaker than the Dow. It almost went negative. So we'll see. This particular indicator, I used it on the upside for the S&P and the downside for the Dow. All right, we've got that out the way. Folks, you might want to check out my opening call with some really nice positions that have been on, and they're doing nicely. So what can I say? Have a great day. That's what I can say. Have a wonderful day and look forward to seeing you tomorrow. And don't forget, stay tuned to TFNN. We've got everybody.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,